Hey everybody, and welcome to Stock Abilities. Today I'm going to be covering the stock market tech sell-off and stimulus bill updates for 2020 in September. Just looking at some basic charts here, you've seen a major drop in the last few days in the stock market, and my theory on that is that they're prepping for updates for the stimulus bill. That now this sounds a little bit ridiculous, but not for an individual, but for airlines and other different sectors that are going to get billions and billions of dollars. The convenience of the drop, literally the last 2 days before the sessions reopen on the 8th. Probably going to hear something over the weekend or on Monday for the updates in that regard. But as you can see here, it took a major tear here in the middle chart here. This is an itchy cloud based uh, resistance support, all that kind of stuff. It dipped below temporarily and then rebounded right back up like it didn't happen in the intraday trading. We had an obscene amount of volume here coming in, and then, of course, you had this breakdown over the last a month or so back in August where everything got delayed, nothing passed. Trump passed some little mini updates to some different related things, but not relevant to this video. And essentially, it got delayed until essentially September. And that September date is coming up here very soon. But in the last few days, the market took a tumble. Of course, very convenient for the market to be taking a tumble right as that bill is about to be coming up to be discussed again on the 8th. That gave a lot of cheap entries. And of course, if you looked at SPY's volume on Friday during its trading session, it was trading rather low, and then it actually ended up exceeding its average trading volumes, showing relative strength to that move. So it seems that despite all the falling in the chopping, they were still buying at those dips well below the core value on that yearly daily chart that I showed at the beginning of this video. And that's very important to keep in mind. As you can see here, they're going to be starting to talk again on the 8th. If they start to vote immediately after the talks, I'm sure they've had a long break to discuss everything amongst themselves, essentially, that they're sort of formulating an idea of what kind of bill they were working on, a skinny bill, which is going to drop the whole 1,200 or whatever per person. It's kind of silly, but that's just how it is. The main focus on this whole bill is what might be promised in said bill. And essentially, a lot of that is kind of focused more on the non-tech sectors, like airlines and cruises and everything are being hurt from this corona type of dramatics going on in the markets. And then, of course, you get an article here not too long before that big drop that Trump signals support for more airline aid. You also had a lot of downgrades recently that came in for cruise lines, and airlines and cruise lines and all of these kind of non-tech sectors seem to be following a very similar algorithm. But as you can see here, that will be helping the airlines. You have to help the airlines. The president says his carriers warn of layoffs. Blah blah blah. The more negative news, the more positive the stock tends to run because the guidance tends to be easier to beat. Just going a little bit more into the article, that with that deadline now looming, Trump suggested Tuesday that more coronavirus relief was on the way. We'll be helping the airlines. You have to help the airlines, as I said earlier. We're repeating that quote again for some unusual reason. White House Chief of Staff Mark Meadows said last week that Trump was weighing executive action if Congress fails to agree to a fresh economic stimulus package to counter the fallout from said pandemic. Blah, blah, blah. The most important thing to take out of this is future guidance is bullish because Trump's basically saying he's going to give billions of dollars to that given sector. And that, of course, is going to stimulate said sectors, whether it's Boeing, whether it's Raytheon, whether it's, just normal airlines in general. All of these are going to get a nice big jump up because of that billions of dollars in funds potentially being injected, no matter how many employees they lay off, no matter how little of the traction that they get. They can't really let something like an airline or a cruise line. Well, they can let a cruise line die, but not an airline. Airlines are very integral to the society that the economy and everything's built up. And of course, they're not going to let defense companies die as well because, war is very profitable to them, unfortunately, but that's just the reality of this world. And as you can see here, you had a nice strong open, like I was going to rebound, and then a complete dump all the way back down to 337. It went actually lower than that. It's not logging it here on the Google charts. I usually use Thinkorswim, but I just wanted to make a quick reference video for this. And then, of course, you see a little bit of a challenge to go back up, dip, 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 up. And then of course it kind of flatlines, and then into the end of the day, absolutely no news came in, and and basically basically it rallied. Sorry about that, I got a little distracted, and it rallied back into the end of the day, and then of course, towards the end of the day, it took another dip. It hit briefly a green on the day again, and then from that point, it just completely failed. And then, of course, flatline, and then went down a little bit more into the end of the day. All this goes back to the chart and what I was saying earlier, that it seems that the stimulus bill is gonna get some kind of updates or some kind of news over the weekend. The dip is just too convenient. Now, if this was a dip without any upcoming news like the stimulus bill, that's gonna be conveniently readjourning to talk about updates to the economy and coronavirus. Even Trump was pushing the whole thing with there might be updates in the vaccines and things like that. And all of this timing with this big drop right here with the big tech sell off in 2020 out of nowhere, that this is a 2 day drop off. It was 358. It closed. It went down all the way to like 335 in just 2 days. No real narratives, no real explanation. They just said it's a cool off, tech cool off, tech taking a break, blah, blah, blah. But this is a massive dump, just in a 2 day span with no real narrative, no real explanation. And with all this being said, the only logical thing that I could think as to why they would be even dumping it so quickly and so aggressively with all these tech companies and all these other companies that are taking a hit is because something in the whole of the economy, the whole of the stimulus bill, they're going to be getting billions of dollars extra. So they wanted it in real cheap for that injection because it's a fundamental guarantee that something at least is going to pass, and they're going to get billions in funding from that aspect. And just using that same concept, that's billions and billions of dollars that they already know that they're going to get guaranteed. So that's good guidance, no matter what the news is, whatever may happen in the coming months. That's a more or less a guarantee that they always pass something for the government. They always pass something for defense companies. They always pass something for these particular companies. Might not be so beneficial to individuals, might not be so beneficial to others, but when it comes to these core companies for the economy to keep going, defense companies, airlines, and things like that, even restaurants and everything that needs supposedly these billions of dollars of funds, the guidance then looks good. And then, of course, they can say that, see, they're recovering. I mean, we helped stave them out. It's kind of like a repeat of the 2008 financial crisis that, they needed this relief. They needed these billions of dollars so that obviously the CEOs can go and make billions and billions and more on a year to year basis. Well, individuals tend to suffer during these times because they claim that they care about these people, but in reality, it's not so much. If it was such a big hit to said companies, these companies CEOs probably would have, not been paying themselves out billions of dollars, and they maybe would have been paying more to their employees or more to their infrastructure, things like that. Even with Tesla trading at an absurd valuation of over 1,000 PE and that's ratio, that's just getting obscene to the point of quite a ridiculous valuation on, and all of this comes back to, this COVID narrative that everything's bad and everything's disappointing and that it's affecting it so severely, and everybody's all, worried about that aspect of it. And it all comes down to the fact that even months before they were selling off and everything, so even if the coronavirus was a true scenario, Not saying it is, not saying it isn't. They were reacting at least a year before this even happened. You could see in early to mid 2019 that they were reacting. I think 2018 is probably when they first heard about it, where it just kind of dropped straight down, then slowly, gradually went back up into 2019 and 2020. It's like they knew that far ahead that this was going to happen. So that's something to keep in mind when you're doing these tradings, that you're basically just a piece on a chessboard of a bigger player. So you got to make sure to keep in mind this market psychology that they like to use in regards to the stock market, in regards to, just how they invest and how they think of you as a person. That it all comes down to that you're just basically there to be a stepping stone to make them more monies. So you got to start thinking in a market psychology point of view that these drops don't even necessarily happen from a technical or a fundamental point of view. They happen from a market psychology point of view, where they can go and adapt you to their trading plans and their trading strategies, and they can adjust in this influx of monies. They can print the monies and make the money printer go brr and all that kind of stuff. And that ultimately helps benefit them more than it does you. But using that same market psychology, you can still benefit from doing this aspect of following the money. Essentially, you can follow sweeps, you could follow these other things that will ultimately point you in the right direction of what their idea of what they're currently focusing on and what they're currently doing. The fact that it rebounded back right back up above that yearly support that it should never have broken during the day, which it did, but of course it bounced right back up conveniently. And they're holding that range, and my guess is they're going to continue up, but they're going to do more of a like a rotational with the monies. They're going to be putting it more in a non-tech than they're going to be putting it in tech. That's probably why they're doing the splits, is because tech's going to get a little bit less bullish, a little bit more sideways, and it'll be harder to drop because of the splits, despite what Tesla might say or despite what Apple might say as to why they did the splits. And I feel other companies are going to start to follow suit. Thank you for listening in, and make sure to subscribe to this video. Well, subscribe to this channel, and if you want more videos just like this. I appreciate you listening in, and have a great day.